Stocks finished mostly higher yesterday after minutes from the Federal Reserve's September policy meeting show that a rate increase may be coming soon. Peter Barnes is in Philadelphia this morning. He's with the president of the Federal Reserve Bank of Philadelphia. That's Patrick Harker. Over to you, Peter.
Hey, Maria, thank you. And Pat Harker, welcome for joining us on Fox Business this morning. I want to get one thing, first question out of here is the news today is about the resignation of the head of Wells Fargo, John Stumpf. The bank had said that its employees opened 80,000 phony accounts here in the state of Pennsylvania. Your reaction?
Well, first, welcome to the Philly Fed.
Thank you.
So I think it ultimately falls into the hands of the board of directors of any corporation to make the decision that's right for them. We as a regulator, what we care about is that companies, organizations, banks have the proper risk management, the proper audit capability, and that their board is fully engaged. So in this case, they made that decision, and I believe that decision was right for them.
Let's move on to monetary policy. You went through your September meeting. The FOMC, the policy committee, chose not to move the benchmark Fed funds rate. Got another meeting coming up in November, another one in December. You've all talked about probably trying to have one more rate hike this year. But you also have a new data point, which was the jobs report last Friday, about 156,000 new jobs. With that in mind and the other economic indicators, where is your head at right now as far as the next rate move?
So I was supportive in September of a rate move, and I am still supportive of, by the end of the year, having one rate move. For a couple of reasons. One, the labor market, as you mentioned, continues to be strong. Some say 150-ish thousand jobs is not strong, but it's well above what we need to maintain the unemployment rate at or near its natural rate. Secondly, we're seeing other signs of wage increase. We're seeing core PCE starting to move toward 2%. So I am supportive of a rate move this year.
Could that be November for you?
It could be. I wouldn't take any meeting off the table.
And just for the record, you're not a voting member of the FOMC this year, but you start in January.
Correct.
For the first time as a voting member. So the economy to you seems where? Is the second half stronger than the first half? What numbers are you looking at, and how do you think the economy is progressing?
So the second half, I believe, is stronger than the first half. Generally, things are going well. The labor market continues to perk along. Not everything's perfect, but it's strong. If there's one weakness, it's business investment, and that's an area that we continue to monitor.
You have also been concerned about the issue of the labor force participation rate, which is still at kind of 40-year lows. It's been ticking up, and you're giving a speech later today about the labor force participation rate. What are you going to say?
So we're not going to see a tick up in a sustained way anytime soon. If anything, our staff here estimates we're going to see another 2 percentage point decrease for a simple reason. We, the baby boomers, are retiring, and we're not re-entering the workforce.
What about, though, different sectors of the economy? We have seen, in the labor market, the wage growth is starting to pick up, but it has not been as strong as, say, Janet Yellen, the chair, has been looking for. We also saw a little bit of soft inflation is still under your 2% target. But where do you see those going?
So I think we are starting to see some wage pressure. We're seeing that in the data, and we're also hearing anecdotally throughout the 3rd district here a lot of examples. For example, one hospital in the district, 9% increase in wages for nurses. They can't find nurses. So we're starting to see some of that pressure build up.
What is your forecast for GDP growth this year, going into next year, and where do you see rate hikes going into, say, 2017?
So our best estimate is that GDP growth will be about trend this year.
So and 2%?
Yeah, 2-ish, maybe a little higher than that given what we'll see here in the third quarter. Going forward, we still have a problem in that the neutral rate, R star, is low.
Yeah.
But that's not what monetary policy can affect. We can create the environment for a healthy economy, but ultimately that is to move that, productivity has to increase, right? And other things have to happen, which is really outside the realm of monetary policy.
And is that what, fiscal policy?
Fiscal policy.
And government policy?
Immigration policy. I mean, think about the labor force. We're starting to run out of people in some ways, right? And many people have entered the workforce. We've seen, if you think about what's happened over the course of recent American history, women entering the workforce going from about 35% labor force participation to 60% labor force participation. There's no other big group that's going to show up in the labor force, and we're retiring. And so I think immigration is a critical component, especially high-skilled immigration, is a critical component of continuing economic growth in this country.